Hey, good morning. This is Carl Blackstone with the Columbia Chamber, and we're delighted that you could join us today. Um, we've got a great program this morning with folks from Elliott Davis, and they've been a huge help to us at the Chamber. I think they could also be a big help to many of the businesses in this community as we deal with Corona and literally the spinoffs that we've got to deal with for the next coming months as it relates to business and trying to get our economy back up and running. So for those that y'all are struggling, we're with you. And if there's things that we can do at the Chamber to help you, please let us know. For those, there is a chat box here, just a little bit of domestic house cleaning here. We've got a chat box. So if you have questions for Elliott Davis, Nick, JJ, or Brittany, feel free to chat. Or you can also, anytime you have a question for the Chamber, info@columbiachamber.com. We'll get back with you as soon as possible. But right now, without further ado, let me turn it over to Nick and with Elliott Davis to introduce his crowd. But Nick, thanks for being with us. We really appreciate it.
Absolutely. Thanks so much, Carl. We really appreciate our partnership with the Chamber and everything you do for our community. So we're honored to do this for everybody and for the partners. So just a quick introduction on us. Brittany and JJ and I, we represent Elliott Davis. So we're a professional services firm of about 750 people across the Southeast. We rank among the top 40 firms in the nation, and we offer accounting, tax, business consulting, a wide range of services. So this year's actually our firm centennial, and we've been on Columbia's Main Street since before it was cool. We've been there about 25 years now. So really an honor to be part of this community. So my name is Nick Annan. I'm a senior manager with our Accelerate team. I've also got with me Brittany Owen, who's a senior manager with tax, and then JJ Littrell, who is a director with our Accelerate team. So glad to be here. All right. Well, just real quick, we're going to try to keep our content and our talking to a minimum so we can answer as many questions as possible. I'm going to speak on the Paycheck Protection Program. Brittany's got the tax changes covered with everything that's gone on with the COVID response. And then JJ will speak on payroll tax credits and unemployment, what's happening in that arena. So the Paycheck Protection Program is part of the CARES Act, was signed into law just over a week ago by the president. And it's a $350 billion program offering forgivable loans to eligible small businesses and nonprofits. So these are awarded based on a payroll calculation we'll talk about in a minute. But the really great thing about these, they can be converted to a grant later this summer if you meet some of the eligibility criteria. So it offers a really great way to keep paying your employees this time when you may be experiencing some business interruption. You will likely need to talk to your bank directly about this. There's a lot of banks, for the most part, that are only offering this to their current customers. There are some that are accepting new customers for this, but it will likely be that they'll ask you to maybe move some accounts over to them. So something to keep in mind. We've seen some banks that have opened their applications already, been open for a few days. Others have not opened theirs at all yet. So it's been, frankly, a frustrating program as it's rolled out over this last week. The guidance has changed 3-4 times, and even last night we got some more clarification. So overall, I just want everyone to keep in mind, remember the spirit and the intent of this program is to keep your employees on payroll and keep them out of the unemployment system. So that's really what this is about. It's not a growth loan. Don't consider it that way. It's strictly to perform that function. So make sure you model out your cash flow for the next 3 to 6 months. Is your business a going concern? Will it still be around? Because you certainly don't want to get to the end of this 8-week period and end up closing up shop and this whole program is for naught. You'll still have a loan. So this loan balance is going to be requested based on 2.5 times the monthly average payroll cost. So this has been one of the hot topics. What is included in payroll costs? What is excluded in payroll costs? How do you calculate this? They left a lot of gray area, which some banks took in one direction, others in another, some more conservative than others. But this is one area that we did get clarification on last night. So your payroll cost is your gross salary and wages. So this includes sick pay, vacation pay, bonuses, commissions, salary. It's your gross pay. It also includes the employer portion of your health insurance and the employer portion of 401k, so like your 401k matches and those kind of retirement contributions. It excludes salary in excess of $100,000. So if you have any employees making over that amount, just purely on that salary portion, that part is excluded. You still get to add health insurance and 401k on top of that. That's something we got clarification on last night. And then you also exclude anyone whose principal residence is outside the United States. So again, it's just for these people that you got on payroll living in the United States. So the next question is, what is acceptable documentation for performing this calculation? And again, my caveat on all this is it's going to be bank driven. Each bank we've seen has required different things and wants it calculated a different way. Hopefully we'll see a little bit more unification after what we got last night, which is posted on the Treasury website, by the way. So your wages can be substantiated by your Form 941 or 944. So on your Form 941, that's line number 1. Line number 2. On 944, it's the line number 1. Your health insurance and retirement, that can be validated by your accounting system detail, invoices. So something that you can provide to show how you came up with that number. And the banks they're not supposed to deep dive into your calculation, but they make a reasonable effort to come back to what you're asking for. One note, this calculation for a small business or a nonprofit does not include 1099 payments to independent contractors. Independent contractors are able to apply for this program on their own starting 3 days from now on the 10th. And so they'll be able to request it at that time. Your calculation as a small business right now is just on your payroll. Sole proprietors will also be able to apply starting on the 10th, and that'll be validated by your Schedule C, profit and loss statements, that kind of thing. So I'm almost done covering this program. I did want to cover a couple quick FAQs that we've seen. A lot of people asking, can I have both an economic injury disaster loan and a paycheck protection program loan? The answer is yes, not for duplicative purposes, right? So you can obtain both of these loans and use them both for payroll. That's not allowed. But make sure before you get either of these that you're talking to your banker about both of these programs, so you don't preclude yourself from having one. Let's see here. Can owners, okay, so if you've got an owner who is not on payroll, right, they're getting draws, can they be included in that calculation for a small business? That answer is yes. So if you're a small business and you're a partnership where you're not, as the owner, not on payroll, you can include up to $100,000 of your draws that you're taking. Organizations that are on a PEO are also eligible. So that's a model you see sometimes where you're actually on someone else's EIN. You are able to take that. 2 other questions. What number goes in the application box for the number of employees? We really think this is a compliance check on the part of your bank to see that you don't exceed the employee count that they've set aside. So that would just be your employee count as of the application date. Last question, if you've already laid people off, do I have to bring them back? Yes, you do, and I would do so strategically. So you gotta really consider, I was advising a company who a lot of their employees are part-time and really would have no, the nature of their business, they will not work. There will be nothing for them to work on over the next 8 to 10 weeks. So in that case, I advise them they should be taking it for their full-time employees that actually are really affected by this. So with that, I will turn over to Brittany to talk about tax.
Yes, thanks, Nick. A lot of great information. So first up, we'll talk about the new deadlines. And I think everybody knows this by now, but basically July 15th is now the new April 15th, meaning most everything that was supposed to be filed and due on April 15th is now automatically extended to July 15th. There's one conundrum, however, that we thought would be addressed in the last bill, but we didn't see it in the text. Second quarter 2020 estimate payments as of now will still be due on June 15th, while first quarter isn't due until a month later in July. It's weird, I know. Hopefully it'll get addressed soon. Also, be sure to watch out for state conformity. As of now, South Carolina has conformed with the federal extension, waiving all penalties and interest until July 15th. North Carolina has as well, but they are not waiving interest at this point. So just something to be aware of. Some other tax-related highlights of the CARES bill. It finally fixes the qualified improvement property technical correction we've all been waiting for. So qualified improvement property is akin to upfits or interior improvements to commercial real estate. The depreciable life of this property is now 15 years, where it used to be 39 years. And this is retroactive to the date of the passage of the Tax Cuts and Jobs Act in late 2017, making it eligible for immediate expensing through Section 179 or bonus depreciation. So people that have had recent upfits to buildings, they can go back, look, and it'll allow taxpayers to immediately be able to amend returns and claim refunds as a result. So couple that with the CARES Act also reinstating net operating loss carrybacks for tax years 18 through 20. Losses incurred in any of these years can now be carried back to the 5 previous years to allow immediate amending of tax returns with the goal of getting refunds in cash back in taxpayers' pockets as soon as possible. So also in the bill, in terms of retirement plans, the Act allows people to withdraw up to $100,000 from their plan without the normal 10% penalty for those affected by the coronavirus. When I say affected, I mean not that you have the coronavirus, but you've experienced adverse financial consequences because of the crisis. As an added bonus, the income tax related to this withdrawal can be paid over 3 years versus all at once, or you can avoid tax altogether if you repay that amount back into the plan within that 3-year time period. Side note, make sure you work with your CPAs and your ERISA counsel to ensure that your plan documents align with the Act to allow for those withdrawals. Also, for retirement plans, if you're required to take required minimum distributions, you don't have to do that for 2020. For charitable giving, to encourage giving, the Act allows for an above-the-line deduction of $300 for charitable contributions for those that don't typically itemize. It also increases the income limitations for these contributions from 60% to 100% for individuals and 10% to 25% for C corporations. So another significant part of this bill is the employee retention credit. Employers whose operations were fully or partially suspended due to a COVID-related shutdown, or if their gross receipts decline more than 50% when compared to the same quarter in the prior year, they'll be entitled to a refundable payroll tax credit for 50% of qualified wages paid by employers to their employees during the crisis. So for employers with more than 100 employees, qualified wages are only those paid to folks not providing services due to COVID-related circumstances. If you're under 100 employees, all your employees' wages qualify for this credit, whether you're open for business or not. The credit is for the first $10,000 of compensation paid to these employees from March 13th through the end of this year. I want to stress, and this is a big stress, if you take out a paycheck protection loan, you will not be able to get this credit. So there's no double dipping in that sense. Also, payroll related, the CARES Act seeks to help employers retain cash by allowing their share of the 6.2% of Social Security tax that would be due from now through the end of the year to be paid later. So half will be due in December of 21 and the other half not until December of 22. As mentioned earlier, this payment deferral is not available for those that take out the paycheck protection loan. So be careful there. See what else? If you're a C corporation and you think you've overpaid your estimates to date based on how your 2020 is looking, you can apply for a quick refund of those estimates. There's other provisions in there, including things related to relaxing the business interest income limitation rules, allowing 100% of business losses to be carried forward versus the previous 80% under the Tax Cuts and Jobs Act. But I think we've covered most of the highlights. So if you've been watching the news, everybody's talking about these stimulus payments, and I go to my mailbox every day, and I haven't seen my check yet. So what's going on with those? So the check is $1,200 if you're single, $2,400 if you're married, plus you get $500 for each dependent child so there's income limitations though. If you make more than 99 as single, 198,000 if married, you're probably not going to see a check. Note that for children, your income limitation increases $10,000 for each eligible child. If you claim somebody over the age of 17, your college students, they will not be receiving a check at this time. I also want to be sure people realize this is in advance of what is really going to be a 2020 credit. So this whole thing is going to be recomputed in some way on our 2020 tax returns. And so let's say that you go through that mechanism and you realize you got too much money as an advance. As of now, they're not going to require people to pay that back. But if you didn't get enough, you're going to get it in the form of a credit when you file your taxes in April of 2021. So we've heard a lot in the media that they're working on a phase 4 bill. So your guess is as good as mine on that one. We've heard it could be infrastructure related, but also heard that both parties may want to table that for now and direct phase 4 to essentially be an extension of phase 3. So word is this bill will be a more targeted response to what they may have got wrong and didn't do enough for in the phase 3 CARES Act, focusing on things like healthcare gaps. There's talks that there could be another round of direct stimulus payments and potentially more money to support the very popular Paycheck Protection Program that Nick just talked about. So the White House also expressed support for maybe a capital gains tax cut, so that would be interesting, and maybe the creation of a 50-year Treasury bond with a waiver that could clear businesses of liability from employees who get COVID while working. So a lot of stuff being talked about. You've also probably heard on the media they're looking at stating that like they would bring back the meals and entertainment deduction to full deductibility to help kickstart restaurants that are affected whenever we get over this mess. And also talks of eliminating the $10,000 state tax deduction cap that was implemented back in 2017. So a lot of talks going on, and it's changing by the minute. Timing on a new package, we've heard it could be here, as early between like the end of April, maybe to the middle of May, but I guess we'll wait and see and stay tuned. So I think that's all I had. JJ, I'll turn it over to you.
Thank you, Brittany. So appreciate you guys having us this afternoon. The things that I'm going to cover today is related to the Families First Coronavirus Relief Act, oftentimes referred to as the Sick Pay Extended FMLA package. So we'll talk about the credits related to that, as well as some other kind of business continuity conversations and things. We wanted to be sure to give you content about these stimulus acts that were just passed, because we know that's a hot topic on everyone's mind, but also want to talk a little bit more broadly about your business as well. So I'll start with Families First. This was essentially extended to support folks that are working for you currently, so they're still employed, but are unable to perform their work duties due to COVID-19 specific, very specific related sick or FMLA leave purposes. There are 6 specific items that can allow for this to be enacted for you to be reimbursed for pay that you pay to your employees for these reasons. So some of these things include, you've probably heard around the healthcare, the child care provision. So if you have folks who work for you who cannot come to work, but otherwise would be working, that are having to take care of children whose school or daycare situation has changed related to COVID-19. The other kind of overarching reason for being able to pay out under the Families First Act is related to a local, state, or federal mandate, like a lot of us are under, related to the stay-at-home or shelter-in-place provisions. So those are the 2 major ones. Then obviously anyone who is being treated for COVID-19, who is under quarantine awaiting test results for COVID-19, and some other very specific COVID-19 healthcare related items, as well as taking care of being a caregiver for someone who is impacted by COVID-19. So hopefully most of our businesses won't have someone directly impacted, with the numbers changing as they are. Perhaps we will, but at this time, a lot of the wages that are going to be paid under Families First are going to be related to the healthcare and the shelter-in-place or the non-essential employees provisions that we have in our various localities. So under those, there are specific amounts of wages that can be reimbursed directly through a payroll credit, based on the type of pay that you're paying and the employee that you're paying. So there's a lot of intricacies that I won't get into related to the actual calculation of those payments. So just know that if you have under 500 employees, and those employees are still working, that they could potentially qualify for the extended sick leave or the FMLA, at which point the payments that are made under this act will be a credit to you off of your payroll tax returns. Typically, those credits will be addressed filing your quarterly 941s. Those credits, however, can be requested early. So from a cash flow perspective, if you anticipate credits based on leave that you know you're paying for, there is a form 7200, that you can fill out that can allow for you to get those credits in advance of the quarterly filing. Important to note that there are limitations by day and by total for each of the employees. And as we mentioned before, these things interplay together with some of the other provisions from the CARES Act. So you can only, a good kind of rule of thumb, you can only be reimbursed for one payroll dollar one time. So if you're being reimbursed for that payroll dollar from the PPP loan that you may be getting, then you can't also be reimbursed for that same payroll dollar under Families First. So just important to know that really tracking this is the most important thing you can do, and keeping great records to make sure that you don't overlap between these various programs, and that each dollar is only reimbursed one time. Not to say that they don't work together, they certainly do, especially as the time frame continues to get a little bit longer, that we're going to be dealing with these things. These acts and these provisions will play together. Just important to know that they aren't intended to be double dipped, if you will. Related to the extended FMLA, there's also similar provisions to the sick pay, and those two can be paid together. So if you have FMLA the first 2 weeks of the 12 weeks of extended FMLA are unpaid, however, sick leave can pay for those first 2 weeks. So you could have someone that has 2 weeks of sick pay under this new act, and then have 10 weeks of FMLA. Again, we can get into if anybody has specific questions. There are daily limits as well as limits per employee of how much can be reimbursed. Your policy can be more generous than the act requires. It just will not be reimbursed if that is the case. Also important to note that these credits are available as of April the 1st. So if you have folks who are out for COVID-related issues or would have qualified for these for this type of pay before April 1st, it is not retroactive. So you cannot apply for credits for pay that was that would have otherwise qualified for this if it was before April 1st. So that's kind of big picture, the Families First, the two credits that are available under Families First Act. The other piece that I kind of wanted to touch on real quickly before we jump into questions, so please feel free to be sending those over, and we will answer those. Brittany, Nick, and I will do that in a moment, but wanted to just talk a little bit high level about your business in general. I know this is one of those things that no one could have seen coming. No one anticipated this kind of pandemic, this kind of worldwide impact. I don't think we could say that there's anyone in this country that isn't impacted in some way by what's going on right now. So this, to this scale, not something we would ever say a business could plan for. But I think about, it seems to be every year or so, there is something that happens. I know, for example, in Colombia, there were floods a few years ago that, caught businesses by surprise. It had major impact in the city. There's often, even within your own business, there may be something that happens to your physical space, whether it's a fire or an accident, things like that. And so we just really encourage you, while this is on a much larger scale than hopefully anyone will ever be impacted by again, it's a great time to think about the things that you're doing now and putting processes in place for whatever the next thing may be, for the next weather emergency, for the next supply chain issue, whatever it may be. Now is a great time to be thinking about getting cash flow projections in place, having budgets and forecasts that you can lean back to, be able to make changes within your business and be more nimble and be able to react more quickly. Of course, we've also seen a change in remote work environment. So we all probably had on our radars and maybe a 3 to 5 year plan, some talk about what would it look like to have our teams have more geographic flexibility to where they're working. And we all had to implement those plans in a matter of hours in a lot of cases. So thinking about how to change processes from analog to digital, or having something that used to be a paper folder that you passed around the office to get signatures and things like that, It has to be done digitally. And so thinking through those things, again, while we hope there's never something like COVID we ever have to deal with again, there may be other things that come up in your business. So think through those continuity plans, not just for the current emergency that we're in, but also in the future, so that you can be ready to make quick decisions and be able to keep your business viable for the long term. So Nick, that's all I had. If we want to go over to questions.
Yeah, that's great. I think we hit almost give ourselves some extra time. That's great. So we want to, take everyone's questions. This is a ton of information. I think at the end of the day, I, really recommend you take all these, questions back to your CPA advisor and have these conversations with them. Let them help you, really navigate these waters because it's moving fast, it's complicated, and it'll take an extra hand to help you through. So I see one question in the chat box right now. I think I answered it, but I'll just double back on it. Does this, talk about the PPP, does this include payment of wages to contractors or freelancers? So if you're applying right now as a small business or nonprofit, no, it does not. If you listening on this call, if you are you yourself are a contractor or freelancer, you'll get to request this PPP starting on the 10th, April 10th, and it will be based on what you've received through a 1099. I'll kick a question out to Brittany. So someone had to talk about the stimulus payments, right? So someone has a baby in 2020. When do they get that check?
So that's a great question, Nick, and fitting for your situation. So yeah, like I said, so this is really in advance of what is going to be a credit on 2020. So for those that have had a baby in 2020, you're going to get that money then. So when you file your taxes come early 2021, you will get credit for the addition and dependents then. Great question.
What else do we have out there?
Nick, that was a timely question for a few people, I'm imagining.
I would think so, yeah. And I'm imagining some people, maybe 9 months from now, will have that same question. So
Correct.
While everyone's kind of getting their questions in or submitting them, I can talk through the forgiveness piece of the PPP real quick. So that's the big, what really makes that a more attractive option for a lot of companies and businesses over the EIDL, right? That you can get that forgiven and you don't have to pay that back. So that calculation will be done later this summer after June 30th. So the amount eligible forgiveness will be reduced based on a couple things. So whoever you apply for this PPP on, you need to maintain that head count through June 30th. So if you say you're using this and you've calculated on 10 people and you actually only end up having full-time equivalents of 8 people, you could have a portion of that loan not forgiven. Also, anyone who's covered under the PPP cannot have more than a 25% reduction in their pay. So something really important to consider there. Do you have to rehire employees you have laid off if you receive the PPP loan, and it would only cover the employees you still currently have on full time? Would we be penalized if we don't rehire? Yes, so good question. It's meant to bring those people back onto your payroll. So whoever you've laid off, if it's someone who is a full-time contributor to your company or relies on this income, then yes, the idea would be that you would rehire them on.
And just to add on that, Nick, I would assume, and correct me if I'm wrong, that if you choose not to rehire those people, that piece of the loan would turn into would not be forgiven. So you would have to pay that money back.
That's right. Assuming that you based your calculation on those people's pay. That's correct. For instance, if anything does, let's talk about this. If anything from the PPP is not forgiven for any reason, that portion turns into a 2-year loan with a 1% interest rate. There's also no prepayment penalty, no collateral required, no personal guarantee. So if it does come that, hey, this portion is not forgivable, you're able to pay that back immediately if you would like to, if you're able to, and not have a penalty for that. For an employee with a wage higher than $100,000, can you claim at least $100,000 for the PPP for that individual? Yes. So that is where you cap that person's wages in the PPP calculation. On top of those, that $100,000 cap on wages, you can then add anything you've incurred as the business for their health insurance and 401k.
Nick, can I ask another question in relation to that? Is it true that, you know, the $100,000 that it has to be annualized? So if you hire maybe a highly compensated individual late in the year, you have to take that into account?
Great question. Yeah. So, I mean, generally what we're seeing is people are applying for this either on a calendar year or a trailing 12-month type period. And just a note, a lot of payroll providers have generated reports that will help you with this calculation. I do encourage you to check them closely because a few of them have been quite incorrect. And they've been correcting those as the guidance comes out. So back to your question, if you hired someone on recently, I would consider that in your calculation, right? I mean, obviously, that person that you've hired now, this is their salary, and you're requesting that reimbursement for them. So I believe that's an adjustment you should be able to make. I have read that the EIDL loan can roll into the PPP. Do you have any more information on this? Yes. If you have an existing EIDL, you'll actually have to refinance that EIDL into your PPP.
And to add to that, you know, in assuming if you already have an EIDL loan, I would assume that it's for non-COVID related purposes or something else. Nick mentioned earlier that the monies can't be used on the same thing. So you would have to refinance that in, but I don't see currently, because EIDL funds, I haven't seen them come out yet related to COVID. They're still processing those applications. So I haven't seen an instance where they're rolling an EIDL COVID related loan into a PPP. Does that make sense?
Yep. Right. And again, you know, encourage you when you have this conversation with your banker to kind of ask that question, just to double check, you know, how they're gonna treat it there.
I have a question. Actually, Carl might be able to answer this better than we can. Sorry to put you on the spot, but or Nick, I know you've looked at it a little bit. You know, we hear that the city of Columbia is offering $10,000 stimulus payments to small business. How does anybody know how that's running or what the status is?
Yeah, I think they had over 600 applications the first round, and so it was a couple $1 million in 2 different funds, and so they are reopened. They've still taking those applications. However, it was first come, first serve on the dollars. So I'm not quite sure if they've awarded all those dollars or not, but I did know that they got 600 applications for those grants.
Yeah. One note on the EIDL, if anyone out there goes and applies for it, you'll get a $10,000 advance on that application in 3 days from applying. Should you get denied for your EIDL, you get to keep that $10,000. So that's nice. One thing we've also seen roll out from the SBA in the last week is they have forgiven 6 months of principal and interest payments on existing 504 and 7A loans. So if you have any of those, hopefully you've gotten communication on that. If you haven't, maybe go double check with your servicer on that, because that's something they rolled out in the last week.
And that brings up another good point, Nick, of any loans out there. If you're worried that you might not be able to make payments, talk with your bankers now. You know, they're given the authority to be lenient in deferring payments on all types of loans. So I think, and JJ, you may have mentioned this, I think it's really important to have those conversations, you know, up front if you think it could be a potential down the road that you need to defer or can't make some payments on various debt service.
And Nick, you made a good point that I think we should highlight here, is that this information is changing hourly. You know, each night it seems we wake up to new information, to new clarification. We appreciate how quickly everyone is working to get this information done. But please don't overwhelm yourself with you have to know everything, you have to know right away. Make decisions and make strategies based on the information that you have today. Work closely with your relationship partners, so with your accountants, with your attorneys, with your bankers, and make the next right decision with the information you have. none of us could predict what's going to come tomorrow. So use the information that you have today to make decisions and pivot as you need to, but try not to bog yourself down or get overwhelmed with you have to know everything about everything. Surround yourself with people that can answer those questions for you and get you, be the subject matter experts for you so that you can kind of tackle this all at once, because we, have a huge team of people and you've got 3 accountants on this call who each are just doing a very small piece of each of these things. And that's our full-time job right now is learning these things and knowing these things. So as business owners, you have a lot on your plate. As leaders in the community, you have a lot on your plate. As family members, there's a lot going on right now. So don't feel like you got to take this all on yourself. You got to know everything. Surround yourself with people that can help.
Carl, I can't remember if you had said, looks like Aisha Drigger's notes, the city of Columbia has awarded almost $500,000 so far from the stabilization funds. Yep.
Thank you for that.
Yep,
Good update.
I had
How about
one
you with
question.
questions?
I had one question come through to me through a different medium asking about the calculations that are coming through on some of these payroll reports and the calculation that you're doing for the PPP loan and kind of what's changed and what to watch out for. Some banks were requiring that you deduct, and there was a little bit of gray area in the language, they were requiring that you deduct FICA and federal income tax paid from your calculation. That is one thing that the SBA and Treasury came out last night and said, no, you do not deduct that. Obviously, y'all as business owners are aware that if you were not given a loan based on that portion, you'd be short a little bit of cash for your payroll, right? So you do not have to deduct that when you're making your calculation. I understand the PPP is first in, first served, but do you have an idea of the latest date to submit an application before the $350 billion is no longer available? That is a great question. So President Trump, Treasury Secretary Mnuchin noted that they're aware of this this rush on the loan funds, right? Everyone perceives scarcity in these funds, and so they're aware of that, and they've pledged that should that pot run out, that they will replenish if they can. So there's not a date to submit an application. Like I said, some banks that have opened up their applications have already shut it down because they've reached the limit that they can do. I think it was, I saw something this morning, Bank of America had already awarded something like $22 billion. So we've estimated that, based on how things have gone so far, and obviously things will probably continue to increase through the week in terms of processing for this, that within the next 2 weeks, that initial $350 billion will run out. So make sure you haven't started that conversation already with your banker, that you do it immediately. The other thing to the application, there's a couple questions you'll answer in there. One of the biggest ones is just you certifying that due to the economic uncertainty around COVID, that these funds are necessary to make your payroll, make these operational expenses.
Hey, good points there, Nick. And let me just say, I want to echo what Brittany said on, I know Congress is looking at phase 4 and phase 5 as this recovery efforts begin around the country. And so the first funds that are going to be out, they're looking at replenishing those as in the coming weeks, depending on how fast those funds leave. But we obviously know that they are out the door pretty quickly as soon as the banks are. I know a bunch of banks started the loan process yesterday. And so by week's end, we'll have a good idea how quickly or how much of the fund balance is remaining out of that. So we'll keep you posted, everybody, on what we hear out of DC in the coming weeks. But I do think that they're going to do a phase 4 and a phase 5. Phase 5 maybe being infrastructure related projects that with roads, bridges, and I think Jim Clyburn, who's chairing the COVID-19 task force out of the House of Representatives, his big push is going to be broadband infrastructure in rural parts of the country, including here in South Carolina. So I think you'll see a big push for that in the coming weeks as well. Listen, I really thank y'all for your help, JJ and Brittany and Nick. Good information to share. To our partners, thank you all very much for tuning in. Thank you for the questions. Feel free to reach out to us, info@columbiachamber.com, should you have any further questions, and we'll try to get you the answers. But Elliott Davis, thank you very, very much for your expertise this morning and time. Y'all stay safe. Wash those hands.
Thank you for having us.
See you.
Bye, thanks.
Bye-bye.